Return fraud is a type of fraud that occurs when customers abuse the return policies of online retailers. It can take many forms, such as wardrobing. This is when customers buy items, use them once or for a short period of time, and then return them for a full refund. For example, someone might buy a dress for a special occasion and then send it back after wearing it. Seller sabotage. This is when customers deliberately damage or alter the items they receive and then claim they were defective or not as described. For example, someone might cut a hole in a shirt and then ask for a replacement or a refund. Empty box fraud. This is when customers return empty boxes or boxes filled with different items and claim they never received the original items. For example, someone might order a laptop and then return a box of rocks and say the laptop was missing. Counterfeit fraud. This is when customers return fake or knockoff items and keep the genuine ones. For example, someone might order a pair of sneakers and then return a pair of cheap imitations and keep the original ones. Return fraud affects online retailers in many ways. It causes loss of revenue. Online retailers lose money when they have to issue refunds or replacements for fraudulent returns. They also lose potential sales from other customers who might have bought the returned items if they were available. Loss of inventory. Online retailers lose inventory when they have to dispose of or resell the returned items. Sometimes, the returned items are damaged, used, or counterfeit and cannot be resold at full price or at all. Loss of reputation. Online retailers lose trust and credibility when they have to deal with fraudulent returns. They might face negative reviews, complaints, or lawsuits from unhappy customers. They might also lose loyal customers who feel cheated or dissatisfied with their service. Return fraud is a serious problem for online retailers. It costs them billions of dollars every year and undermines their business model. In this video, we will explore how online retailers are striking back at return fraud and what you can do to protect yourself from it. Return fraud is a serious problem for online retailers. It is the act of abusing a retailer's return policy in one way or another to gain benefits or money. Return fraud can take many forms, such as buying items with the intention of using them once and returning them later. This is also known as wardrobing or free renting. Selecting the wrong reason for a return, such as claiming the item was damaged or not as described, to avoid paying for shipping or restocking fees. Buying items from a competitor and returning them as late as possible or with counterfeit products to sabotage their inventory or reputation. Creating multiple accounts, purchasing items, and returning the packages empty or with different items to get refunds or store credit. This is also known as box stuffing or switch fraud. Return fraud can cause significant losses for online retailers, not only in terms of revenue, but also in terms of customer trust, brand image, and operational costs. According to a study by Appriss Retail, return fraud cost U.S. retailers $27 billion. So how are online retailers fighting back against return fraud? They use various strategies and tools to prevent and detect return fraud, such as stricter return policies. Some online retailers limit the time frame, the number, or the type of items that can be returned. They may also charge fees for returns or exchanges, or offer store credit instead of cash refunds. Some online retailers require customers to provide proof of purchase, such as receipts or order confirmation emails, to verify their eligibility for returns. Verification systems. Some online retailers use barcode scanners, RFID tags, serial numbers, or holograms to track and authenticate the items that are returned. They may also ask customers to provide photos or videos of the items they want to return, or use biometric data, such as fingerprints or facial recognition, to verify their identity. Data analytics. Some online retailers use data analytics to monitor and analyze customer behavior and transaction patterns. They may use machine learning algorithms, artificial intelligence, or predictive models to identify anomalies, outliers, or suspicious activities that indicate return fraud. They may also use data analytics to segment customers based on their return history and risk level, and tailor their return policies accordingly. Fraud prevention software. Some online retailers use fraud prevention software to automate and streamline their return processes. Fraud prevention software can integrate with various data sources, such as payment processors, shipping carriers, social media platforms, or third-party databases, to verify and validate customer information and transactions. Fraud prevention software can also flag or block fraudulent returns, generate alerts or reports, and provide recommendations or actions for online retailers to take. By using these strategies and tools, online retailers can reduce the risk and impact of return fraud on their businesses. They can also improve their customer service, loyalty, and satisfaction by offering fair and transparent return policies that balance their needs and expectations with those of their customers. Return fraud is a serious problem for online retailers. It is the act of abusing a retailer's return policy to get money or products for free. Return fraud can take many forms, such as buying items with the intention of using them once and returning them later. This is called wardrobing or free renting. Returning empty packages or counterfeit items instead of the original ones. This is called price arbitrage or seller sabotage. Claiming that an item was never delivered or damaged in transit. This is called delivery fraud or chargeback fraud. Return fraud can hurt online retailers in many ways, such as losing revenue and inventory from fraudulent refunds or chargebacks, increasing operational costs and complexity from handling returns and disputes, damaging customer satisfaction, loyalty, reputation, and trust from delayed deliveries or poor quality products, facing legal risks or penalties from violating privacy laws or consumer rights. However, online retailers can also benefit from combating return fraud, such as improving customer satisfaction, loyalty, reputation, and trust from offering a smooth and fair return process, boosting sales and profitability from reducing losses and increasing margins, gaining insights and data from analyzing return patterns and customer behavior, enhancing security and compliance from implementing fraud prevention measures and best practices. Therefore, online retailers need to balance the benefits and challenges of combating return fraud. They need to adopt a proactive and holistic approach that involves setting clear and reasonable return policies that deter fraudsters but do not alienate honest customers, using technology and tools that detect and prevent fraudulent returns, such as identity verification, data analytics, artificial intelligence, etc. Educating and training staff and customers on how to avoid and report return fraud. Collaborating with other stakeholders, such as payment providers, delivery services, law enforcement agencies, etc. By doing so, online retailers can protect their business and customers from return fraud while enhancing their competitive advantage and growth potential.